Good morning, all. I hope you had a safe and amazing Independence Day weekend. Now, what I wanted to do is come on here before the week begins and talk about how you can play these alerts, the three types of alerts we have, and how I would play them if I were in your position. So, without further ado, we're going to start off with day trade alerts. Now, these can sometimes move a little bit quickly, so I try to give the best heads up I can in addition to the contract that I'm eyeing so everyone can get in as well. Now, the entry is the main thing. I would say the exit could be a little bit difficult, but once you get the entry, you should be rocking on the same exits because what I'm going to do is I'm going to teach you the strategy I use to gauge exits so you don't have to wait on my exit as well and you can get out. So, without further ado, we have day trade alerts, and as you can see, the first one at the top says eyeing BBBY 34 call for 7.2. So what I would do is I would go over to my brokerage, pull up this contract. I'd take a look at the premium. I would say, okay, let's say this is $1.30 or something. I'm gonna look at my account balance and say, okay, maybe I have 5K in it or something like that, but I know that BBBY could sometimes be a quick mover. So maybe I'm going to allocate, let's say I have 5K in my account, I'll go 250 to 300 on this. Then what I'm going to do is say, okay, that's two contracts. Maybe if I'm feeling more risky, I can put in three. So I'm going to have the order ready. When that buy to open comes through, you can hit the send. You can just buy it. I typically recommend you can buy at the ask, maybe even between the mid and the ask, but you never want to go with the mid. And here's why. If the call is moving up while you're trying to get in, and you're not buying at the ask or so, you're going to end up recycling. And what I mean by that is it's not going to fill the first time. So you're going to cancel that order and try again, cancel and try again. And before you know it, all those times you're canceling and trying again, you're going to end up buying at like 1.5, 1.55. So you want to make sure that you're trying to get the optimal entry at first, because just buying at the ask straight off the bat, as long as the spreads aren't that wide, that can really benefit you in the long run, and by the long run I mean for that play. Now you can see the stop loss was at 1.2. Typically I keep a 10 max of 15% stop loss. If it ever passes that, I indicate that we try to find the best way to stop out of that play. So 10% stop loss at 1.4 would be 14 cents, so down to say 1.26. So it's safe to say 1.2 is maybe 14% stop loss. Now, how do you want to play a stop loss? Well, this play did go green. It went green to about 1.6, I think maybe even a little bit more, and then it started falling down. Well, one thing I'd like to say is that whenever a play goes green, I always keep my stop loss at break even. The reason for that is so that you're not digging into any profits. You know, if you get out some in the green, so let's say you have two contracts, you sell that at 1.6, that's going to be 20 profit each, that's $40. Now, if you stop out the other one at 1.2, well then now you're profiting 20 on the play. So you took out about $20 profit. Now, with that said, you are coming out green on the play, so that is okay. But if you kept a stop loss at break even, then you wouldn't have really been in that problem. So that's the main reason behind that. That essentially helps. I never like to let those green plays go red. So with that said, let's say you even got in at 1.42, 1.45. Keep a stop loss at your break even. Remember, this is my trading strategy. You can apply it and do the same. Remember, for regular day trades, I'm going in with 10% or less in my account. Light trades, I'm looking for 5%. Anything risky, maybe 2 to 3%. And that's not just being applied to, like, say, if you have a large account or something. You can do that on a 5K account, 2,500, so on and so forth. Whatever account size you're comfortable with, as long as the plays fit that budget. So with that said, how do you want to stop out of these plays? Well, let's just look at our stop loss. We know our stop loss is at 1.2. Well, when the mid is at, say, 1.22 or 1.24, then we want to start looking to stop out, depending on what the spread is. Because if you wait until it goes to 1.2, the chances of getting filled are very slim. And then what you're going to end up doing is recycling. You're going to end up canceling that order, trying again, canceling and trying again. And by the time you're done, you can end up getting filled at 1.1 or so. So always be prepared to stop out. Have the number of contracts ready, have the order up, and just get ready to hit the send button. Another thing, do not panic whenever you have to sell for a loss. Remember, the whole thing about the stock market isn't about winning every play. It's just unrealistic. But you want to keep a high win rate, you want to keep consistent, And the key thing behind these plays are taking those small, consistent gains because they're going to add up throughout the day. If you can take 10% on each play, you can come out on the week. Obviously, you've seen with the 5K to 100K challenge, the average percent gain per day on that account was about 5%, and there was only one red day. Now, with that said, I do aim for about 15-20% at the very least on, day trades that even if you do get in within, maybe like a 5% tolerance, then you can still profit 10-15% as well, at the very least. Obviously, we have those that are going to run a lot, and those are going to push the challenge account even further, or any account. So with that said, there aren't just alerts that run 10%. There are going to be some that run 100, 200, 300%. You've seen it a lot of times before. But that's the key thing with this strategy. We're coming out green on those plays. We're minimizing our risk in general. So keep that in mind for day trades. And remember, there's about a 5% tolerance to get in. Now, with that said, we're going to move over to the small account alerts. Now, do remember with these are going to be cheaper premiums, meaning they're going to be less than $1, but they're going to be a little bit more risky. Reason being, think about this. If you buy a play at 0.5 and you sell at 0.4, that's going to show as a negative 20% loss. However, in reality, that's a $10 loss. So with that said, the percentages can always look larger than essentially the loss appears to be. Now, one thing you don't want to do is, let's say you're playing small account alerts with a larger account, such as 10K or something. You don't want to go in with, 2,000, 3,000 per any of these plays, because these are going to be risky. Remember, we're trying to kick off a smaller account balance, so the percentage can essentially be a little bit more volatile, as I was just saying, and that can really kind of fluctuate your 10K account. You can see it go down to like 9K, 9,500, then you can see it go up. So you want to make sure you're scaling in light with those. If you have a larger account, anything over like $1,000, I recommend, going in at 5%. I'd say over 1,000, maybe 2,500. Going with maybe 5% of your account on these plays. Now, with swing trades, what I really want to say regarding these are some really great plays. As you know, we have a certain method behind these. These are essentially like reversal plays. Now, cash at will, you might see these in small account alerts as well. That essentially represents an exit. You can take the exit, whichever one you want on this. Whenever you see winner, though, you can assume that winner kind of means like we're all out of it. We might not alert any more exits for it. That's just the amount that we're comfortable with. And do also remember that if a swing trade profits more than 10% on the day, we will scale out, or we might close it out completely. In this type of market, you've seen where it's very choppy. I mean, look at last week Friday, or just last week in general. We had a lot of chop throughout the days. So securing those profits as you go along are very essential. And do remember this, that you can't control losses on swings as easily. What I mean by this is, let's say that swing is down 10% before close. The next day, you can't say, okay, I'll stop out negative 15%, because if the next day that swing opens down negative 40%, you can't necessarily control that loss. You're going to have to deal with it then and pick the optimal exit. So swings can be a little bit more risky, but that's if you don't manage your risk correctly. Typically, I recommend, go in with 5% or less of your account in each swing play. For longer plays that have a longer expiration, such as like January or so of the next year, you can buy one contract and then always add another one in as you need to, like average down later on. Anything that maybe expires within the same month or early in the next month, you can keep a 20 to 30% stop loss if you like. You see that we follow up with all of our alerts. We essentially put out winner, cash at will. Which exit you want to take, but do remember that winner typically represents an exit for us. So do keep that in mind. And with that said, this is kind of going over in general what our strategy is behind these alerts. So I hope this helps a lot with getting in. And what you can do is, even when we put out eyeing this alert or so for day trades, you could simply pull up the chart, in TradingView or Webull, and kind of look to see what we're looking at as well. What do we see in this play? Why are we taking it? Even if the play goes red, you can kind of gauge and say, okay, what would I have done differently in this situation? Or why did he stop out at this point? Remember, I'm telling you here, I'm mostly a support resistance or a pattern trader. So you can kind of see what I'm looking for in those charts, and that's going to help you to grow as a trader as well. Remember, a lot of plays, or almost all these plays, will require some manual input of work on your end too. But with that said, let's kill it this week and let's get it again. I hope this helped, and if you have any questions, drop them below this video or DM me on Discord.